COVID, and then again by Russia's invasion of Ukraine. These are very, very different circumstances. So what the Fed has done this time around is it has increased interest rates. If they go another 75 basis points, which is very likely on November 2nd, they will have increased interest rates from 0.25 to 4%. And that's a 16-fold increase. What did Volcker in the early 80s? He took interest rates from 10 to 20%. That's a twofold increase after consumers and businesses had gotten used to dealing with inflation and working around it over 15 years. This is a real shock to the system. And I do believe we will see the ramifications in many ways. We're seeing housing shutting down. And I think we're going to see a lot of other activities shutting down as well. We believe we're in a recession, and we believe this recession now will be sustained. And if we see an increase in GDP, it's probably because either inventories are continuing to increase or imports are coming down as companies try to unwind their inventories.
Cathie, so do you see a severe recession? And then how long do you think this bear market will continue?
Well, what's interesting, I think many people are coming around to the idea that we're in a recession or we're going into a recession. The first two quarters with real GDP growth negative to us means we're in a recession. And now that many people are worried and are beginning to see recession for as far as the eye can see, we are looking at this recession a little bit differently. We think it's going to be a function of this massive inventory overhang, and that it's going to be a serious inventory correction, but it's not going to be anything like we saw in 08, 09. That was a systemic financial problem caused by the mortgage and financial meltdown. We don't think this is the same thing. So now that many economists are starting to agree with us that we're in a recession or going into a recession, we feel that they might become a little bit too alarmist if this is just an inventory recession. And I think the Fed will have a lot to do with whether or not it is. This is a shock, though, to the system. And this idea that we have an inventory overhang, we think it's going to get bigger as consumers pull back. Low saving rates, 3.5% versus 8% where it was before COVID. And so we'll see. We think this holiday season is going to be pretty tough.
And so as you kind of ready your shopping list for that holiday season, Cathie, when you think about some of the kind of ways that equity valuations are starting to price in that recession to the best of their ability, is there a big buy that you now kind of think through or evaluate going into the end of the year here?
Well, you have to consider the source here. Our focus, our sole focus, is on disruptive innovation. And we also believe that innovation solves problems. We had a tough time going into COVID with our kind of strategy. And then we had a boom in our strategy during COVID because guess what? We needed the genomic revolution to help sequence the coronavirus and figure out tests and vaccines. And our kinds of companies helped with that. We think with supply chain issues and with the food and energy prices caused by this shock, this Russia's invasion of Ukraine, that once again, innovation is going to help solve these problems. Electric vehicles, there's an accelerated consumer preference shift towards electric vehicles like Tesla because of oil prices. And we think there's no stopping that trend now. And in terms of food prices, we do believe that gene editing is going to help us figure out how to produce crops in areas that are less fertile than the Ukraine, the breadbasket of Europe, with less water, less fertilizer, less pesticide. So we're going to continue to see the miracles associated with the genomic revolution, but our other strategies as well, whether we're talking about robotics, solving the labor shortage, energy storage. I mentioned electric vehicles pulling us away from oil consumption, artificial intelligence, which is going to help every company become more competitive if they use their data and combine it with other data in effective ways, and then blockchain technologies, which is going to take the middlemen out of a lot of businesses and take the cost out of a lot of businesses, helping us to solve this inflation problem. So again, consider the source. We think innovation solves problems. It certainly gave us an appreciation of that during COVID. Our strategy was high flying, and we think we have even more problems right now. So stay tuned.
Cathie, this economic shock that you talk about in large part at the hands of the Fed, does that cause a shock to one of your long-term holdings in Tesla in terms of the stock price and also the company's financials?
Well, certainly all stocks are experiencing difficulty in this environment as the market tries to understand how far the Fed is going to go and how deep this recession is going to be. So Tesla, as I mentioned, is a solution to the problem. It's very interesting. If you look at gasoline demand this summer in the United States, it dropped below COVID levels, the worst of COVID, and it dropped to levels that we have not seen since 1997. That's real demand destruction, and it couldn't have happened, we do not believe, without electric vehicles at the margin taking huge share from traditional automobiles. So if we had to be concerned about an industry, it would be the traditional auto industry. We think that gas-powered vehicles are going to be obsolete within the next 5 to 10 years, and the traditional auto industry has to figure out a way to migrate into electric vehicles and into the next big phase, which we think Tesla is leading, the autonomous taxi platform phase. So lots of changes here. Traditional industries are in harm's way as innovation pushes through, accelerated by some of the turmoil out there.
Cathie, when we last talked back in the spring, I believe it was just at the beginning of the Elon Musk Twitter saga. Now we are maybe getting to a little bit of closure in that case. But I would pose to you the same question that I asked you then, because a lot of time has elapsed and different events have happened. Are you at all concerned about Musk's attention wavering now that it looks like he is, in fact, going to be taking over and likely at least having a pretty heavy hand in running Twitter?
Well, we are prolific users of Twitter. ARK gives away its research. We give away our research not when it's finished, but as it's evolving. And our most prolific platform, social platform out there, is Twitter. I'm kind of excited to see what Elon will do. I actually think he'll work closely with Jack Dorsey and maybe open up the ecosystem, take away the censorship, make it much more transparent, and I think add more value to that ecosystem.
You don't think that it'll be a mess if that happens? That it'll just be sort of a free-for-all where it's tougher to find commentary of value?
You know what's interesting about Twitter, and we found this, we have a lot of debate around ARK's own strategies. We can filter that debate ourselves. So we can unfollow people if we think there's bad behavior, but that's our choice. And we can follow those people who we think are moving discussions, whether it's about innovation or the economy, moving discussions along. So I think there's a lot of wisdom out there, and we're kind of sick of the nonsense that we see on some of these social platforms. And Twitter, I think, is going to give us more tools to filter out the nonsense and get right down to business.
I certainly would like to filter out a lot of the nonsense sometimes on there, Cathie. I want to ask you more broadly about ARK Invest and your funds. I was looking at ARK in particular and the fund flows that we have seen, which we're seeing sort of bigger swings to the up and to the downside earlier in the year. They've gotten a little more muted as of late. You talk a lot about your 3 to 5 year time horizon. which I think makes sense, but I wonder how patient investors are going to be, particularly in an environment where they're seeing losses, not just in ARK, but in lots of other areas as well.